Hey guys, welcome back to the channel. In today's video, we are going to look at synthetic indices. Synthetic indices. Lately, synthetic indices have been getting a whole lot of recognition from traders looking to diversify from trading general forex as well as stocks and options and things like that. So people are also looking into synthetic indices, and synthetic indices are getting uh, some much recognition. You can see I'm actually in a trade there in a buy. This is crash 1000. This is crash 1000. So if you are not aware of synthetic indices, I think I've done a couple of videos on this channel already explaining what are synthetic indices. So I'm not really going much into what they are. The question that was asked is, synthetic indices are safer than trading normal forex? So that's the question that we are going to try and tackle with this video. Generally, we have a number of synthetic indices that are offered by this broker. At the moment, the only broker that offers synthetic indices is a broker called Deriv. They used to be called binary.com. Now they are Deriv. So they are currently the only game in town. So if you want to trade these synthetic indices, we've got boom and crash, we've got volatility indices, we've got step indices, we've got the jump indices and the rage break indices. So if you want to trade on any of these pairs, these indices, you actually have to sign up with a Deriv. I believe the link is in the description box below. So, are they safe, or are they safer than trading forex? That's the question. Are synthetic indices better than trading forex? I will start off saying the person who asked this question is kind of a vague question for me, honestly, because, for example, maybe safe means in terms of ease of trade, or in terms of avoiding losses and things like that, or it might mean, is this broker reliable, is the system reliable, and things like that. So safe is kind of a bit vague. Before we dive into that, if you are new on this channel, please consider subscribing. That's how you are not going to miss any of our future videos. Like the video. Liking this video shows me whether you like this content or you do not like this content. If you like this content, then I must definitely continue making this content on your behalf. So this is what's happening on crash 1000. I just wanted to check this trade there. It's nearing that zone. Like I always tell people that these indices are very easy to trade, and you can make a whole lot of cash trading them. So yeah, definitely there I was testing something and I took a big L there, but in any case, so where was I was talking about, are they safe or are they not safe in terms of them versus forex? I would say synthetic indices are somewhat safe in the sense that, for example, they are not affected by things like fundamentals. If you're trading forex, you need to understand fundamentals like major news events and things like that. With synthetic indices, there is nothing like trading news. There are no fundamentals that are going to suddenly swing the market against you or swing the instrument against you, which can happen in trading forex. You already know, like recently with the CPI and the market basically basically this stock market, the crypto market, just took a nose dive after the CPI announcement in the US. Today, I think we have got FOMC. We might again see another dive on those instruments. We don't get that with synthetic indices. So in that sense, they are somewhat safe for people who hate being caught off guard by fundamental news. Second point, these synthetics are not moved by like real world events. Like they are not moved by a catastrophe somewhere, maybe a tsunami in China, or the COVID pandemic, or things like that. Those things have got no bearing on these synthetic indices. So in that sense, still they are kind of safe. The movement that you see here are actually generated by a algorithm. That's at least what we are told. I don't work at this broker, so I'm just telling you what they tell us. So don't kill me on that. These movements that you see generated here with this Crash 1000, it's actually a algorithm that's doing all this, and it's so randomized. At least that's what they promise us. It's so randomized that the broker themselves, Deriv, they do not know whether this is going to be a spike down or we are going to have these smaller candles. They don't know when it's going to happen because the system is so random. At least, again, that's what they tell us. Unlike with Forex, where you have the big banks, where you have the big hedge funds, they definitely know where they want to take that currency to. They definitely know the price that they are aiming with gold, with Euro USD, with silver, with USD JPY. They know before the retail traders, or they know before even fundamental news where they want to take the market. With these synthetics, we are promised it's so random. It's so random, so it can go either way. It can definitely go either way, and that's how people are making a lot of money, by just understanding the odds. So that's just what you need with these synthetic indices. You just want the odds in your favor, but otherwise the rest, you don't need to mind about that. So in that sense, you find that these synthetics are somewhat safer to trade than Forex, which is manipulated all the time. Then one other thing that you also love about these synthetics is, well, unlike Forex trading, and you find that you are trading 24 hours a day, 5 days a week. These synthetics, you can trade them 24 hours a day, 7 days a week, 365 days a year. Why? Because they are being generated by this algorithm. It's a random algorithm that's moving this market. So you can trade this any time of the year, and it's not affected by seasonality, by things that you find in Forex trading. So I always tell people that you don't have to be stuck with Forex trading. You really don't need to be stuck with Forex trading. If you are looking to try something else and Forex is not working out for you, there are synthetic indices. Try synthetic indices, or you can go into crypto, or you can go into crypto, or you can even go into stocks, or you can go into options. Sometimes people just feel they are stuck with Forex. You are not stuck with Forex. Go into synthetic indices. As long as you understand what you're doing, if you have some good grounding in trading Forex, you definitely have good chances succeeding with these synthetic indices. Otherwise, guys, if you have any more thoughts on this subject, are synthetic indices safer than Forex? Leave your comments, your thoughts in the comment section below. I'll see you in the next one. Bye.